Okay, fair enough.
Basically goading the banks to give.
Oh yes, that's an important one. In fact, let's now move on. Then we have our next guest joining us from the sidelines of Motilal Oswal conference. We have Gautam Duggad, who is now joining us. Gautam, good afternoon. In fact, before we talk about your conference, in fact, since you're in your conference, I think you had SBI chairman as well. I wanted your thoughts on the whole banking system and the kind of moves that we have seen of late in some of the corporate banks. PSU banks have rallied. I wanted your thoughts on that first.
Sure, yes, the SBI chairman inaugurated our CEO track last week. He was the first speaker for our CEO track sessions. And he very clearly mentioned that the restructuring that they are expecting in their book will be less than or equal to 2.5%. So if their loan book is 24 lakh crore, they are expecting the restructuring amount to be less than 60,000 crores. Separately, we are hearing from different banks who have presented over the last 4 days, and also some more are expected to present today and tomorrow in our conference, that the initial scare that people had about restructuring is slightly diminished now. And most of the banks are saying that business activity is picking up after June. And in fact, that is the feedback we are getting across sectors, that July and August have seen more improvement both on demand and supply side. And therefore, the quantum of moratorium also that we have seen, moratorium 2 is substantially below moratorium 1. And going forward in the next 3-4 months, you will see more improvement. However, given that there are still several localized lockdowns which are going on and business activity is not back at 100%, the loan growth still remains a problem. And therefore, consequently, given the excess liquidity that banks are carrying on their balance sheet, margins could be a bit of a problem for this year. But aside of that, I think as far as the restructuring scare was concerned, when it was first announced, there is a lot of debate and discussion around it. Most of the banks are saying that it will be low single digit, and SBI specifically mentioned 2.5% is the cap.
Okay, that's interesting. So restructuring, at least at SBI, shouldn't be more than 2.5%, as per what Gautam picked up at their conference. Gautam, a larger question, we are done with Q1 earnings. You've heard so many companies at your conference and throughout the earnings season. So the key question is, will the numbers, the corporate numbers, will they start catching up with the excitement in the market? Because the market seems to be baking in absolutely a full recovery and total normalcy, I'm guessing, in the near future.
Yeah, so the market seems to be looking far ahead of the current situation that we are handling on the economy as well as on the health side. However, one important thing that stood out for me from this conference so far, and I have attended at least 30 meetings over the last 4 days. Across the board, there is one common conclusion, is that demand is picking up month over month. So August has been better than July, and July was better than June. And June we saw a lot of pent-up demand post the April and May lockdown. Number 2 is that we have seen also improvement on the supply side. Supply chain has got restored for many of the sectors in the month of July and August. And that is very important, because if pent-up demand is there and your supply is not able to cater to that demand, then that demand has no meaning. So this is a very important takeaway for me. And third, more importantly, aside of top 10 or 15 cities, I think the rest of the India seems to be doing phenomenally well on consumption. So whether you call it rural, tier 2, government consumption-driven, government expenditure-driven consumption, or good monsoon and kharif sowing, whatever can be the reason, but the important point is, rest of the India, aside of the top 10 or 15 cities, is doing exceedingly well. And a glimpse of that we saw in the auto numbers which came for the month of August. We also heard the commentary of Jubilant yesterday, where they said that for the month of August, their delivery and takeaways are almost at the last year's levels, or in some cases even they are seeing growth. So clearly Q1 seems to be an aberration. Obviously, everybody looked at it that way. We were expecting a 35-40% profit decline. We got 35%. But one important takeaway from the first quarter earnings is, again, the resilience that corporate India has shown in terms of managing the cost. And we have seen that across sectors, across companies. The cost has been virtually taken out from the P&L, and therefore, despite 30% top line degrowth in Nifty, the EBITDA decline was just 10%. So clearly, some part of that cost is going to come back as normalcy resumes and business activity starts. But at the same time, some of that cost is going to be permanently deleted from that P&L. So clear, and as far as our estimates are concerned, we did see 2-3% upgrade in Nifty FY21 and FY22. Yeah, I mean, Whether FY22 estimates are met or not remains to be seen, because there is a lot of euphoria right now in the market about recovery. I think the valuations at which market is currently trading at 11,600, clearly it's not as lucrative as we had seen it in May or June.
Okay, Gautam, one of the stocks which you recently had coverage on had been a phenomenal mover, and I wanted your thoughts on that. I don't know if you covered it in the conference or not, but IndiaMart, tell us, we had the management, of course, in the morning. It's almost doubled in last 3 months. Is it now too expensive, or are you still keeping the faith here?
Absolutely, Anuj. The story is extremely attractive. The business is, poised for growth for multiple years ahead, given the wave of digitization that we are seeing in SMEs and middle, part of the businesses. Secondly, their business model is quite strong in the sense that they collect the cash upfront. So it's a deferred revenue that they have, and that allows them to report very strong cash flows and consequently ROEs and other balance sheet oriented metrics. The problem, Anuj, as you mentioned, is in the last 10 days, the stock is at 50%. So while the business and story is attractive, I'm afraid the price is no longer as attractive. If you have a 5-6 years kind of a view, you can still end up making money. But somebody who has a very short term view, I'm afraid I don't think you have a lot of room for upside in the short term.
Okay. Gautam, I must ask you about one of the stocks that you've always liked in the past, and it's Titan. We were just discussing it actually earlier on the show, but I'm just curious. I mean, gold prices are sky high, and I don't know how many people will want to load up on jewelry in this festive season and the wedding season. But what is happening here, you think? It's racing away to 1200.
So, Lata, some of it is obviously pent-up demand, which market is expecting across discretionary sectors. But if you go back, in the earlier episodes of gold price inflation, around 2005, 2011, you will recall that there was a 20% gold price CAGR in that period. And at that point of time, Titan's profit CAGR was 44% in that same period. I'm not saying it will repeat, but what I'm saying is the consumer behavior is very different in this segment. Here, the rising price elicits more demand, and people have a fixed budget of buying gold for various occasions, be it for wedding or any other gifting related occasion. So while the volume of gold may come up, it is more than compensated by the price. And as is the case in any commodity, the P&L behaves very differently when price goes up rather than the volume. When price goes up, you don't have any additional cost. It inflates your profitability also, provided the volumes don't fall off the cliff. And that is what we saw in the earlier episode. We are quite positive, not from a gold price inflation point of view, but we think that the opportunity in this segment is immense, and there is virtually no national pan-India branded competitor which is there to take on Titan. And secondly, we have seen, and again, this is coming across many sectors in our conference, operators are talking about the shift from unorganized to organized. While it has been underway for the last 4-5 years, post-COVID, it is expected to accelerate. And more importantly, within organized itself, we are going to see some shift away from some small organized to large organized. Size of category is quite large. There is virtually any competition on the branded side. So the field is quite open for Titan for multiple years ahead. And therefore, that remains our number one preferred discretionary consumption pick in India.
Okay, lastly, insurance stocks. You have both the index stocks now, HDFC Life and SBI Life as your top picks. What kind of compounding can one expect from this pocket?
Anuj, all the three main prominent insurance companies, SBI, HDFC and ICICI, presented at our conference. And one common thing which is standing out is there is a clear-cut rising awareness for protection-related products. It brings in a lot of margins over a period of time. Obviously, initially it takes away some cost and therefore margins are impacted. But from a long-term point of view, because of COVID, the awareness of life insurance as a protection product is going up. Secondly, digitization has helped a lot of these insurance companies cut their cost over the last 3-4 years. And I can recall 2 of the 3 companies who presented mentioned about doubling their VNB over the next 3 to 4 years. In fact, we just came out with a coverage on SBI Life yesterday. Our own expectation is of 17% CAGR, or more than 17% CAGR on VNB over the next 3 years. But clearly, it's a very structural story. It will compound over a period of time. This is not a get-rich-quick sector where you get in and make immediate money. For somebody who has a long-term view, can definitely benefit from the penetration and structural story. And obviously, it's a sector which is a long-term beneficiary because of the whole pandemic-driven disruption that we have seen, and it has helped create more awareness. So larger branded players who have very strong on-ground presence should benefit for many years going ahead.
Okay, all right, Gautam, good talking to you as always. Thank you very much for taking out the time and giving us the important takeaways from the conference and of course the earnings season. Thanks very much. Look forward to the next one. Well, on that note, let's quickly get back to the markets.